Hi, my name is Marissa Kuhn. I am the brand specialist at Berks Homes. Today I'm with Ron from Univest and we're going to be talking about mortgage pre-approvals. So Ron, what is a mortgage pre-approval?
Thanks for asking. So when a customer comes to me and they say they want to look into doing a mortgage, I give them two options. They can be pre-qualified or pre-approved. We always want them to get pre-approved because if they get pre-approved, they're allowing us to do a hard credit pull, which means we are going to go in, pull credit. It's going to affect their score a little bit, but we're then going to see all the components of their credit. How many pieces of debt, what are those payments per month, and kind of qualify them to make sure that they're eligible for financing. We check the income, the assets, the employment, and the credit score. So you have to have a certain credit score to be able to get a loan, which varies by the type of program, the down payment, all those good things. So on the income, we say how many years have you been employed? We need a 2-year history of employment. The only way around that is if they were in school full-time, that counts towards it. So if you were a graduate of Westchester University in 2023, we get your transcripts, and then we see if you're employed. Obviously, you need to be employed presently when you apply to do a minimum of a 2-year rule. On the assets, we collect bank statements, and we look to see if there's any large deposits. A large deposit is more than 50% of your monthly income, meaning what you get paid. Let's say you get paid $5,000 a month. If that large deposit comes in more than $2,500, we have to ask where it came from and kind of prove it. So that's the income, that's the assets, and then again, credit score would basically tell us what program they can do with their credit score.
So why does a pre-approval matter? Why is it important?
Excellent question. So if a customer goes to your Fairview Square townhomes in Mount Penn, and they say, I want to buy this $254,000 townhome, Ian, the sales rep, is going to come to me and say, hey, can we get this customer pre-approved? And as soon as we get that customer pre-approved, we know what they can and can't do based upon the full payment: principal, interest, taxes, insurance, mortgage insurance if there's less than 20% down, and the HOA dues. That all goes into like a mixing bowl, and we say, okay, let's say that payment is $2,000 a month. They're going to need to make more than double that. And if there's any other expenses going out of their pocket each month, those also get considered. They have to make more than double that. The mortgage plus the car. It's not utilities, it's not cell phones, it's just the things that show on credit.
So how do you go about getting pre-approved?
Excellent question. So with my website, it's www.ronbeebehomeloans.com. What you're going to do basically is you just go to the website and it's a landing page. It's 100% encrypted. You enter all your information: name, date of birth, social security number, 2-year housing history, 2-year employment history like we talked about, your assets, and then what you're looking to do. Are you looking to buy a single family home? Are you looking to buy a 2-unit? Are you looking to refinance? That's all asked in the question and answer session. It takes between 7 and 10 minutes. If you're self-employed, it might take 15 to 20 minutes because there's more information. As soon as you're done, it automatically comes over to me. Again, it's all encrypted and secured. No one can see anything. And then I go to work and get all the information put together, verbalize to the customer it's okay to pull credit, and then get the information from the customer like the pay stubs, the bank statements, and go through that process.
So when should I plan to get a pre-approval in the house hunting journey?
First. Before you even call a realtor, I'd highly recommend you talk to a home loan officer to make sure that you're good for it. Because when you get the realtor involved, now they're spending their time away from their family, putting gas in their car, showing you properties. If they're buying new construction, it's the new home site agent. That person's taking a good amount of their day to show you the property and make sure what it is you're looking for. Did you want the end unit? Did you want the middle unit? You know, are you buying a duplex? Are you buying a single family detached, whatever? For them to get you to the proper property, it's best to know what is it you're actually eligible to purchase.
And how much does it cost to get a pre-approval, and is there any obligation?
Great question. There's no cost whatsoever and there's no obligation. So when they come to me, I want to make sure that that's the first thing they do, because I'm going to pull credit and make sure they're good for it. And when all the documents are compiled and we have already run it through underwriting from front to back, knowing they're good for it, and then they go to a new home site agent and say, I'm actually fully pre-approved, it's a whole different story than if you go in with a 1-page pre-qualification letter where we have checked credit and we have looked at a few pieces like income, asset, and employment, but it has not been run through underwriting. That's the pre-qualification. Pre-approvals when they've gone through underwriting and all that's been checked over.
As a loan officer, how involved are you with your client throughout the home buying process?
Very. So how I explain it is I'm the quarterback. Okay, I'm watching all the different people in the field. I have my own sales assistant who helps me procure all the documents up front and basically just amass the file. And then when we're done that, which we basically call loan setup, the loan's transferred to a loan processor. Her name's Amy for all of my new construction loans. and then she handles all the back, like the appraisal and the title, and if there's any documentation remaining, and works with the underwriter. And we have a pipeline call every Tuesday on every file to make sure nothing's going sideways, or this popped up, or they changed the lot number, whatever. That's taken care of every Tuesday to make sure that we're always on the same page.
So do you go to settlements, or what is your part?
Every one of them.
Okay.
Yeah. The only ones I haven't gone to, as an example, I did a refi in Florida, and I didn't go to that one. I offered, they didn't want to pay for the ticket.
Okay. So what is a monthly PMI payment?
Excellent question. So we have all different types of loan programs. Some go through the US government, some are private. Most of what I do is US government, whether that's conventional conforming, which is the same as Fannie Mae and Freddie Mac. They're the two kind of big wheels in the sky. They're owned by the government, and they do what's called a conventional loan. So depending if you're putting down 5, 10, or 15% is going to dictate how much your mortgage insurance payment is. As is, what's the loan size? The more your loan is, the more it's going to cost to insure it. As is, what's your credit score? So those are the main components to get to how much is that mortgage insurance going to cost me each month. Now, if you go to FHA, it's then called MIP, Mortgage Insurance Premium. And the funny thing is, with conventional loans, as I was talking about, that goes out to a secondary market that's entirely private. So private companies make their money. With FHA, it's owned by the US government. Okay, so it's taxpayers. Basically, it's either 3.5 or 5% down is typically what people are going to do for an FHA loan. And it does not matter what your credit score is. If you have a 680 credit score or a 740 credit score, FHA charges you the same amount each month. The small negative to FHA is you'll always have the mortgage insurance. Even when you get to 20% ownership, they still charge it because there were people that had defaulted and it cost the FHA fund a lot of money, so they charge the mortgage insurance for the life of the loan now. If you do a USDA loan, they also have a monthly premium. It's very low, but it's on there. I'm sorry, I don't think it's on there for the life of the loan. It's probably only on for 20%, but it's also different than FHA. So you have regular, FHA, and USDA all charging different premiums.
So how should I go about refinancing my home due to interest rates?
This is going to become such a hot button because right now, obviously, we're at a pretty high spot. Last week, we had an increase in rates for a little bit. So we're back into the 7s now on a regular 30-year fixed rate mortgage. So when this does come about, which we do fully expect it to happen, it's going to be basically you reach out to that same loan officer. You can call anybody. We can't make you do business with us again. We'd love to, but you reach out to your loan officer. You know, he's going to know, he or she's going to know where you are in your current situation and tell you what it's going to look like if you chose to refinance, and dictate whether you're going to be doing a no-cost refinance where they take the current interest rate and raise it by a little bit, which gives them more profit, and they take that profit and pay your closing costs with it. Okay? That's a no-cost refinance. Or you can take a little bit of a lower rate and have regular closing costs. As long as you have the equity position, just finance those closing costs, which is usually the better bet. So I always try and educate customers to say there's no such thing as a free refi. I see a lot of things out there. There's a such thing as a no-cost refi, but not a free refi.
So I have a personal question. Every time you check Credit Karma, does it decrease your score by a little bit?
I've heard this before. So the only way you can have your credit score affected is if you actually give someone, Credit Karma, a lender, whoever, permission to actually pull your credit. And they're going to make you attest that you're okay with them pulling your credit. Then your credit gets pulled. Credit Karma, Credit Sesame, all of your banks that give you access to your credit score cannot affect the credit score. So the only way they can actually lower your score is if they do a hard pull. Car, mortgage, credit card, jewelry, all those different places, not just a Credit Karma inquiry.